Hey YouTube, this is Zach with Achilles Financial, and we are back with another video where I am going to take us into a little bit more of a long-term strategy video, not necessarily looking at just our quick flip trades. Again, the market was trading sideways again. Overall, I am basically at the same point that we started the day, really 2 days ago. So with that being said, I want to just highlight what we can do in the meantime to guard against some of the market uncertainty, as well as just continue to advance forward in light of everything going on. So with the recent uptick in cases and hospitalizations, there's been a hesitancy for the market to break out. However, there also appears to be just not a willingness for the market to go down. So for those of us who are still continuing to work and we're saying, what do we do with our money? I do want to recognize that instead of keeping it in a bank account, I always will say that stocks are still the best option for long-term investing. That being said, you should still have enough cash on hand to keep comfortable and keep that in a high-yield savings account and checking account. So what I'm looking at today are the 3 stocks that I'm currently going to be using to build out my long-term portfolio. And 2 of those stocks I currently am building in there, and this is my individual brokerage account, not necessarily my 401k accounts or my Roth IRA accounts. So that being said, the stock that I have recently started looking at more and more often and really have come to love ever since I saw it last week and I did a flip trade today is Taiwan Semiconductor Manufacturing. And again, this is another chip provider. You know that I am huge on the chip providers, but this would be my equivalent to Nvidia. And Nvidia is my all-time favorite chip stock. It is one of my favorite stocks out there. I think everyone should own it. That being said, at the price point that it's currently at, I think it ended today right at 400. But Nvidia is 402. It's just very expensive, and one of my favorite strategies for my stocks is to run covered calls on them. Now that being said, Nvidia is very, very attractive for covered calls. I mean, you can see even a week out on this one for $500. We're looking at still 20 bucks, and that's after it's been kind of going back and forth. But if I have it to where it covers earnings on August 15th for $500, hey, you can see my call there, but for $500 you can get 250 bucks. And that does cover earnings, but that means you're still taking 25% of that growth right there. So there's just a lot of ways that you can profit off of this. But for those of us who are not capable of running that type of play, just because again, to do that you do need $35,000 worth of those shares right now, or rather $40,000 worth of those shares right now. It's what are the other options? What else can we do? And for that, I've really come to love Taiwan Semiconductor Manufacturing. If you look at this over the past 3 months, they've appreciated another 25%. They did announce earnings this week, this morning actually, and they announced another earnings beat as well as positive guidance for third quarter. So I think my reasoning for why it didn't necessarily skyrocket today is a lot of that was priced in, but I do think that we're going to consolidate in this range, and going forward we're going to have a lot of room for appreciation still. This is a company that does a lot of the work for both AMD and Nvidia in terms of their chips. And so I like them as a growth opportunity, but also they have a dividend yield, and that dividend yield comes out to around, I believe it's 33 cents a share on a quarterly basis, so 4 times a year. So they're around $1.30 a year. I like that. I like the growth projections here. Again, you can see that this company, it just continues to perform very well, and they are a massive chip maker. So again, I think that this sector is going to continue to get love on a go-forward basis. However, I do recognize that there are some concerns associated with Taiwan as a country and investing in foreign investments. But at this point in time, I do really like it. The other 2 stocks I'm not going to spend near as much time on because they're both well known to everyone here because I bring them up all the time, is Bank of America, who has continued to struggle over the past 3 months, despite the fact that they dropped pretty heavily from where they were at the beginning of the year. but this is a stock that I continue to have a lot of faith in the long-term growth investments. I do think that short-term we're not going to see the crazy gains that we would expect to see from some of the growth-oriented stocks, but it's just a great long-term hold. They have a solid dividend right now of 18 cents a share, and that's paid quarterly. So again, pretty solid yield. Let's see, it's right now at 3%, but again, I think that that's going to continue to bounce around in term depending on your cost basis. But I like the stock as a whole, and it's a company that I do believe in long term. It's not going anywhere. It's very well capitalized, and I believe that that dividend is safe. So for all of those reasons, I do continue to like Bank of America, and I think that they will return to profitability. We will get out of this pandemic, and with that growth upside, if you hold this for 5 years, and that's how long it takes to get back to $30 a share, then that's still solid dividend appreciation during that time, as well as you'd be looking at anywhere between 30 to 40% upside. So I have a lot of faith in the stock. This is one that I am continuing to build out my portfolio in as well. And then lastly, the third position that I'm going to recommend and suggest you hold, again, we've been talking about Pfizer. This one I am happy to see it bounce up after hours because I do own shares of Pfizer. The reason I like Pfizer, if we look at the 3-month graph, again, it hasn't necessarily exploded just because of the exposure it has to the healthcare industry as a whole. And there's a lot of their drugs, in particular like a Viagra, that's not seeing as much purchases, and some of the supply chain is messed up. But again, just a stock that long term, again, a lot of capabilities dependent on the drug side, but this just has a lot of movement in terms of potential to go upwards. But look, even over the past 5 years, it's only gone up 3%. And while that may dissuade you from necessarily investing in a stock like Pfizer, the very attractive piece is that 4.2% dividend yield. So I really like that aspect of it, just because even over the 5 year, this is a relatively low cost basis from what we saw last year. And they are in a position to potentially benefit from some of the coronavirus vaccine research. So all of that being said, I do want to take you onto my TDAmeritrade income estimator just to show what a position of 100 shares of all three of those would look like. So for those of you who are not currently using a brokerage platform, my current favorite brokerage is TDAmeritrade. And one of the awesome things for long-term perspective is it gives you the capability to paper trade, and essentially you can go and make real trades in their Thinkorswim platform. And I do really like that about the platform. The other cool thing is it just has a lot of research capabilities. It is a more complicated but also much more powerful tool than a Robinhood. I do just like how the options are displayed on Robinhood, and again, it is kind of fun play money. So it's just fun to utilize, but for long-term investing, I do prefer a more powerful brokerage, and TD Ameritrade gives me the capabilities to hold multiple accounts under one user, and that's just what I was looking for as well as what I like. The other thing I think is very cool is it shows you right here on this screen just the capability of using a income estimator, and this is strictly off dividend income. So you can see my dividend yield here in the middle of the screen on the 4 companies. Again, this is based off of current price. So this is another thing I like, is that type of value gets updated a little bit more accurately and a little bit more actively than a Robinhood. But you can see that dividend per share, and I always want to own at least 100 shares of a stock just so that I can be paying those, or rather issuing those covered calls. And so whenever I see a number like right around this 391 or really 400 shares or $400, what I would be doing on a annual basis, or whenever I get these, is I would be reinvesting them into the stock. So $152 every single time that dividend comes out. So again, that 152 divided by 4, because I do believe that they are quarterly, then you're looking at really a 1.3 share of Pfizer stock at the current price, which just means that income is going to continue to rise. So right now we're just saying that this is what we're expecting. However, I really think that that would go up. So what we're looking at here again is I'd like to see the total market value stay around here as I continue to pile money into these investments, particularly that TSM. That one is, again, relatively new to me, so I'd like to get more in there. But I like that stock. My current leading position and the one I'm closest to for 100 shares is Pfizer. So I'm going to continue to apply that in just because I like the price. I think it's one that I'm comfortable paying at this point in time. And so I want to get to that 100 shares so that I can be issuing those covered calls. Why am I wanting to issue covered calls? So as you can see here on the 391 that we're looking at, what I would be very comfortable doing, and I'm going to go back into Robinhood at this point in time, is if I had 100 shares of Pfizer, what I'd like to do is just go in here and then go out to the beginning of the year, and you can see that these options are actually not priced very high, which is somewhat surprising to me just because you can see some of those moves now on the call side. So Pfizer may actually, this is the first time I've looked at some of these longer term calls, but this is actually not far off for them. So I may be inclined to do some of these trades. But if without having to go that far out, then I could go out to the end of the month and say, hey, for $37 a share, I'll take 43 bucks. And then if I'm doing that on Pfizer, if I'm doing that on Bank of America, so that is $43. If I do the exact same strategy here and I say, hey, I'm going to take some money on these stocks for $25, that's 42. So right now I'm at $85. And then TSM, every 2 weeks, just going off of the exact same strategy that we just walked through here, as long as I'm not getting caught out on these, so I could do $70 for the next 2 weeks. So all that being said, we're looking at right under $200. So I'm collecting $200 every 2 weeks. So assuming that all of that goes as beautiful as I'd like it to, then you're looking at another $2,600 that you can just pick up just doing covered calls, as well as you're getting that dividend income. So you can get another $3,000 pending how those premiums play out and all these different variables. But I'm just highlighting the value of having a long-term portfolio, and in particular having those 100 shares. Is you're essentially looking at an initial investment of $12,500, and with relatively low effort, at the end of the year you could have over $15,000 just by making the same exact trade every single time with very low risk. All that being said, at the end of the day, things change. It is up to your decision making and your discretion, but these are two strategies that I look for when I'm building a long-term portfolio, and these are the 3 stocks that I'm looking to utilize. So with that being said, I'd love to know what your long-term portfolio looks like, stocks that you would recommend, and if you can drop those in the comments below, I'd love to hear from you. Thanks. I'll talk to you later.